Hello traders, Gary Wagner here, 11:45 in Honolulu, 5:45 in New York on Friday. Happy Aloha Friday, as we say on the islands, 31st day of March 2023, and this is the Daily Report for Gold and Silver, our weekend review. Today, the Commerce Department released its most recent data for inflation, revealing a decline in both year-over-year and month-over-month inflationary pressures. Economic forecasts anticipated that inflation would remain steady at 5.3%. Instead, the PCE inflation index came in at 5% year-over-year once we factor in a 0.3% increase month-over-month, which is a decline from the previous month, which came in at 0.6%. Gold pricing had a strong monthly gain, but declined today by $10.70, 0.54%, with the most active June contract currently fixed at $1,987. Dollar strength provided headwinds. The dollar was up 0.46%, and the index is currently fixed at 102.285. Lastly, silver is continuing to exhibit a disconnect from gold, gaining 1.03%, with the most active May contract up approximately 25 cents at $24.23.5. This being the last trading day of the month, we have our monthly tally clearly showing a large advance in terms of gold pricing. When we look at the size of this candle, the range is about $200. The move from open to closing price comes in at approximately $152. And when we compare it to previous candles, we do see the month of November being about the same size in terms of open to close, as well as if we go back to 2021. However, when we convert our monthly into a weekly chart, it really tells a different picture, showing a tremendous range over the last 2 weeks of the month, in which the open and closing price were very close together. This type of candlestick can be identified as a doji. Nonetheless, the biggest move this month occurred 3 weeks ago, or the second week in March, in which we saw the largest differential between the open and closing price. The first part of the month comes in very doji-like, with the real body close to the top end of the range. When we take into account what has occurred over this last month, we can draw the conclusion that we are absolutely in a full-blown bullish market scenario for gold. The first thing I draw your attention to is the three moving averages. First, the 50-day in green, 100-day in blue, and 200-day in red. The fact that the 200-day is below the 100, which is below the 50-day, that is in full bullish alignment. The next thing is we have seen consistent higher highs throughout this year. In fact, on November the 3rd, that was the conclusion of our triple bottom. From there, we had the first instances of higher highs as well as higher lows, and that continues through today. That being said, I believe when we look at the short-term fluctuations in price, we could see one more price decline before we get a major upside move. This assumption is based upon our trend analysis, pattern analysis that includes Fibonacci retracements as well as an Elliott wave count. What we are looking at is the conclusion of a third wave that came in at around 1977. It is also an important price point. From there, I believe we had a rather long multi-month correction, taking us down to $1,814, completing a fourth wave. We are now in a fifth wave that we are going to subdivide into a fractal count. We believe that we have completed the wave 1 out of 5, That moved gold from these lows just above 1,800 to the record high this year, 2015. And we first assumed that we had a simple ABC correction. However, when the C came in with a higher low than the previous low, we changed and addressed our model, assuming what we could be witnessing can simply be referred to as a compression triangle. We hit the top. We then came down for the first part of this correction. We then had a lower high and then a higher low, and then we broke here. I believe this was our fourth wave, although it came a little bit over the top, and I believe that we could see one more sell-off, which would complete our wave 2, a 5 out of 2 count, and according to Elliott wave theory, at that point, you get what is called a thrust. That is confirmed because gold prices trade and effectively close above this resistance line that we've identified. Our premium subscribers have been aware of this and are simply awaiting for us to send out a trade alert recommending when to enter the market. Of course, our premium subscribers will receive a trade alert notification via SMS text message and email. This has been Gary Wagner, wishing you as always good trading. We will talk to you after the weekend. Bye-bye.